Hi, I'm Bill Pearce. I work with the Overseas Private Investment Corporation, or OPIC. We're the United States Development Finance Institution. Did a quick change. Actually, my title has changed since last time I did this a year ago, so I'm now Deputy Vice President of Investment Funds. Well, thank you very much for having me and moderating this. We have a very august panel today. What I'd like to do is go down the road. Everybody can introduce themselves, what they do, and what is their interest currently and in the future in Africa. So, Suzanne, would you like to start first?
Thank you. Glad to be back at Africa Investor. It's always a good venue for catching up with Africa. I'm the director of the Investment Management Division of the United Nations Joint Staff Pension Fund. We are the world's most global pension fund with investments in every member state, and we're up to 194 member states. We were very early, and fortunately early, to invest in Africa in private equity, real estate, and publicly traded equity, as well as fixed income. So we're broadly invested across all asset classes, and happy to be here to get another perspective on a very growing market.
Thank you, Bill. My name's Ashley Bendell. I run the New York office of African Alliance. African Alliance is a Pan-African investment group. We're in 12 countries across Africa, and we have an investment banking asset management business as well as a private equity firm. We develop property across the continent and also run an insurance group and an SME stroke retail bank across Southern Africa.
Yes, Ed Mathias with the Carlyle Group. We're a global asset management firm with over $200 billion. I think we were the first global firm to establish a foothold in Africa. We have a $700 million fund that we started about a year ago. And I guess on a personal basis, I should say I've been quite involved because my wife was instrumental in doing Power Africa for the Obama administration, and we're probably the only U.S. investor. I'm probably the only U.S. investor that has a house in Nairobi. So,
Thank you. Colin?
Colin Coleman from Goldman Sachs. I'm a partner, been with Goldman for 14 years. I have 4 children. Great to be back here. Goldman Sachs is active in principal investing, in advising, in financing, in asset management, really across the board in Africa. We're active really through South Africa, Nigeria, Angola, Kenya. Nigeria would be the sort of main markets, with Mozambique and some of the oil and gas discovery countries featuring more strongly in terms of the travel patterns of the Goldman Sachs people. But that's broadly what we're doing.
Thank you, and I'll round it out by letting you all know what OPIC does in Africa. We are an independent government corporation. We are self-sustaining. We actually make money and give back money to the taxpayers, U.S. taxpayers. We have about $18 billion of commitments outstanding, broken out between structured finance projects, which are the big ticket debt finance deals, SME finance, political risk insurance, and the department I work in, which is investment funds, where we have about $2 billion committed to private equity and credit funds around the world. And Africa is probably our largest exposure. About over 30% of that $2 billion is committed to Africa. And we've been in Africa for a while, even back in the 90s, when in the very early days when there really was no private equity in Africa, or even it was just starting even around the world in emerging markets. So we continue to have Africa, sub-Saharan Africa particularly, as a focus. And I think it's now become one of the, if not 25% of OPIC's exposure and commitment, and growing. And as you know, we're also very much involved in the Power Africa initiative that Ed and his wife have, Ed had mentioned his wife has worked hard on, where OPIC has committed about $1.5 billion, or to put $1.5 billion to work in generating as well as distributing power in Africa with a focus on renewables in the next 5 years. So with that, let me go straight, you can ask further questions later. Let me go first straight to asking questions of our panelists. I will start with Ed, but what I will do, though, is also has one overarching question I would like all of you to answer in your responses, and that is sort of the purpose of this panel, is what, in your opinion, are 3 things that the World Bank could do to support the creation of a pipeline of SME IPO prospects to deepen Africa's capital markets? As a private equity person, I'm actually very interested to hear your responses because we are concerned about our funds exiting, which it takes a long gestation period, and I'd love to hear your comments. But Ed, so that's the overarching question for all of you to answer. Well, I'm conscious of time, and you've heard from all our panelists, and I'd like to open up for questions from the audience. Yes.
Good afternoon. This is Most Enlightening. My name is Donna Sims Wilson, and I am the new president of Smith Graham and Company, a $6 billion asset management firm headquartered in Houston, Texas. My question has to do with debt capital markets in Africa. There's been a lot of talk about the equity capital markets, but you've seen a growth in African countries accessing the global capital markets for their sovereign debts. I was wondering, could you talk about that and using Eurodollar bonds for infrastructure and international investors such as me to have access to those bonds? Thank you.
It's a good question. As I mentioned, we've done several bond issues of late in Nigeria, but I think one of the, and probably what you're referring to, is that the issuance of sovereign bonds has really taken off, and that's good and bad. It's good because there is the creation of vehicles through which you can participate in the development of these countries. It's bad in the sense that many of these countries are actually not in a great position to be continuing to issue, and there's a potential overheating relative to fiscal ratios. So, for example, and I'm not picking on any country, but Ghana, for example's fiscal ratios are obvious to everybody who's looked at them, have significantly in the last few years. And so whilst the capital markets and countries are taking advantage of the capital markets, that the word was used as hot, and they're certainly hot, we have to be cautious that they're not, that there's not an exploitation of this new hot sudden environment for capital market issuance, and then we get back to these countries becoming overly indebted. But the fact is that there are good and bad stories in relation to the use of those bonds. So are the proceeds of these bond issuances being used well? Certain countries they are, particularly for infrastructure rollout. But I would just sort of advise caution, have a look when these bond issues are issued from the sovereigns as to what is the fiscal position of the sovereign, what are the credit rating agencies saying, what are the countries saying about the use of proceeds, and what's the track record of implementation. Just finally, if I might, Bill, I just wanted to make the point that when we think about what are the main obstacles to Africa meeting its potential right now, I think the fact is that we've got the wind to the back with all of these countries, China, South Africa, everybody behind the growth of Africa, multinational sovereign wealth funds, private equity. But it's really up to the countries themselves to take advantage of that wind and make it work. And the question is, where does it work and where doesn't it, and why? And obviously, political will is key. So are the Nigerians really going to implement power reform and really get the generation capacity built? And are they going to take advantage of Power Africa and so on and so forth? And then the question, separate from it, is are they in a position to do it? And so that brings you to the institutional capacity building. But I put it in that sequence because if there's no political will to get it done, or there's superficial political will to get it done, then it won't happen. If there is the political will to get it done, then the question becomes, do they have the capacity to get it done? And often you trip over the first question, get past it to the second question, but on the second question you trip over that. So you don't get the implementation. So to your question of what the World Bank should be doing, they should be doing 3 things: institutional capacity building, institutional capacity building, institutional capacity building.
I love it when a question generates many other questions. Ed?
Yeah,
You want to add to that?
This is something of a tangent, but it relates in that one of the issues that hasn't been mentioned is currency volatility. And if you're a U.S. investor or a European investor and you're exposed to some of these currencies, it can be a major, major factor. And I think the rand would be a good example. And what we see in some of these markets is that the obligation is denominated in one currency and their revenues that it's dependent upon are another one, and that can be a vicious cycle. So we haven't found a way to hedge currency, but it's something that has a huge impact that we have to think about. I don't know, you probably see the same.
Yeah, no, my quick point on the debt question. I think it's remarkable how yields have contracted, right? Nigerian Eurobonds, when you talk about hedging against the currency, you've obviously got local sovereign debt and Eurobonds, which are increasingly popular by emerging markets managers still chasing that yield. Nigeria, 5%. I think the Ghanaian government were extremely happy to get off their $1 billion Eurobond a couple of months ago at 8.125%. President Mahama himself stated quite a few times during UN week that he was very happy with that. But I still think it's quite interesting. I was having a conversation last night with a US fund manager that invests in emerging markets that is starting to look at Africa. And I still, and just continuing to see interest into these debt markets. So yes, Colin, I agree. They do find themselves in a tough spot. On the flip side, you're still seeing emerging market managers looking to add additional capital to their African portfolios.
That's very encouraging. As a U.S. government agency, of course, we're also we're trying to find more U.S. LPs, well, the private equity space, obviously, but to generate interest in Africa as well as other emerging markets. I think we better wrap it up. I think lunch is waiting for you all, but I want to thank all of you for listening to us, your kind attention, and thank you all panelists for a wonderful presentation. Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.